accounting is an information system that identifies, record, and communicate an organization economic event to interested users, usually in the form of financial statement and in monetary term, all under the supervision of competent management. Conventional accounting is incompatible with Sharia law and also a method which goal is to ensure optimum utilization of scarce resources restricted to profitable activities through accessible market information. Next, Islamic accounting is a sort of accounting that establishes its aim and conduct all of its operation in accordance with Islamic Sharia ethical and objective guidelines. The goal of Islamic accounting is to ensure that an organization information is transparent, adequate, and reliable so that the process is compliant with Sharia law as well as social and economic standards. The Bank Islamic Banking subsidiary Standard Chartered Saudi Berhad was established in November 2008 as the first and only in the group network. They provide a diverse range of products and services that adhere to Islamic banking and finance Sharia standards. Through dedicated branches and Islamic banking windows and Standard Chartered branches, Standard Chartered Saudi provide a broad variety of Sharia compliance solutions. Kuala Lumpur was recognized as the bank worldwide headquarters for Islamic retail banking in 2012. Standard Chartered Saudi, which is an Islamic banking subsidiary, is a prominent supporter of worldwide Islamic financing corridors.
Bank Islam is Malaysia's first Sharia-based institution. Bank Islam was founded in 1983. It has become a symbol of Islamic banking in Malaysia since its creation, and its aim to be a global leader in Islamic banking exemplifies the bank's position as the country's financial services industry. Bank Islam was founded to help the country's Muslim community with their financial needs, but it has now expanded its services to the general public. Currently, the bank offers Sharia-compliant card services as well as mobile banking. Bank Islam has been steadily improving as indicated by its financial performance and paid-up capital.
MyBank Malayan Banking Berhad, which is MyBank, is a Malaysian universal bank and it is the largest bank in Malaysia. MyBank is the first bank in Malaysia which is established in 1960. MyBank is founded by Tikun Kontak Puat, a Malaysian business. It is also the largest listed firm on the Bursa Malaysia by market capitalization in 1962. MyBank is also one of the Southeast Asia's largest banks, with total assets surpassing $183 billion and a 2014 net profit of $1.92 billion.
The basis preparation is Standard Chartered Saudi Berhad financial statement for the unaudited condensed interim financial statement for the financial period ended 30 September 2021 was preferred in compliance with Malaysian Financial Reporting Standard 134 interim financial reporting. The Malaysian Accounting Standard Board established the Malaysian Financial Reporting Standard Framework, which went into effect on January 1, 2012. It complies fully with the International Financial Reporting Standard Framework, enhancing the credibility and transparency of Malaysian financial reporting. The financial statement includes all of the group Islamic banking related activities. The acceptance of deposit and the provision of funding under Sharia principle are referred to as Islamic banking. Furthermore, except for the adoption of following MFRS and amendment to MFRS that are effective beginning on or after 1 January 2020, the accounting policies and method of computation in the unaudited condensed interim financial statement are consistent with those adopted in the last audited financial statement during the current financial period.
Is basis of preparation for Bank Islam. The group's and bank's financial statements were prepared in line with Malaysian Financial Reporting Standards, MFRS, International Financial Reporting Standards, IFRS, Malaysian Companies Act 2016's regulations and Sharia requirements. The impact of COVID-19 pandemic was considered for the first time in the group's and bank's annual financial statement. Next, the government has taken steps to aid customers who are experiencing temporary financial difficulties as a result of the pandemic. The following are the important factors that influence regulatory and accounting treatment and also classifications. Firstly, moratorium repayment on financing. Definition of defaulted exposures under the policy documents on capital adequacy framework for Islamic banks, which assistance is granted. Classification in the Central Credit Reference Information System, which is CCRIS, and Bank Negara Malaysia (BNM), allows financial institutions to draw down certain prudential buffers. BNM also requires financial institutions to restore the minimum regulatory requirement by 30 September 2021. The following are accounting standards, amendments, and interpretation of the MFRS framework that have been issued by the Malaysia Accounting Standard Board (MASB), but have not been adopted by the group and the bank. So, first is MFRS interpretation and amendments effective for annual periods beginning on after 1 January 2021. amendments to MFRS 9, MFRS 139, MFRS 7, MFRS 4, and MFRS 16, interest rate benchmark reform, phase 2. Second is MFRS interpretations and amendments effective for annual period beginning on after 1 January 2022. Last but not least is MFRS interpretations and amendments effective for annual period beginning on after January 2023.
The bank's financial statements, as well as those of its subsidiaries MyBank Group or the group, were produced in compliance with Malaysian Financial Reporting Standards (MFRS), International Financial Reporting Standards (IFRS), and the provision of Malaysia's Company Act 2016. Unless otherwise stated in the summary of important accounting policies revealed in Note 2.3, the financial statements of the group and the bank have been produced on a historical cost basis. Separate disclosures on the group's insurance and takaful businesses, as well as its Islamic banking activities, are included in Notes 64 and 65 respectively. The underwriting of general and life insurance businesses, the administration of the general and family takaful company, and investment-linked businesses are the core operations for insurance and takaful enterprises. Apart from that, accepting deposits, giving financing, and trading in Islamic assets under Sharia rules are all examples of Islamic banking. Firstly, Sharia-compliant alternatives for conventional products such as savings or current account is the bank will earn profit from these activities and allowing us to grow our savings without getting it from interest. This is called expected profit rate instead of an annual interest rate. Next, the contract that can use for this product is Wadiah Yatamana account. It is a safekeeping account with guarantee which allows the bank to utilize the funds for bank activities. In this contract, the bank accepts customer assets and safely stores them as wadiah in the bank until the customer requests that the asset be withdrawn. Secondly, Sharia-compliant alternative for fixed deposits is predetermined profit sharing and murabaha, which is cost plus sale that may allow us to get the benefits of a fixed deposit account without sacrificing our financial security. The contract that can use for this product is Islamic fixed deposit, that is an Islamic term deposit with predetermined profit rate. In this contract, it is based on the Sharia principle of commodity murabaha, which is cost plus sale, in which the bank identifies and uses a specific asset as the underlying asset for the sale and purchase transaction between the bank and the customer. Another contract that can also be used is tawarruk, which is a sale contract, in which a buyer buys an asset on credit from a seller and then sells the asset to a third party for cash at a lower price than the deferred price. This contract is happen when a buyer purchases an asset on delayed terms. The buyer's aim is not to gain from the item, but rather to make it easier for him to obtain liquidity. Thirdly, Sharia-compliant alternative for property financing is the buyer asks for money to purchase the property. The bank then acquires commodities for the buyer with a value equivalent to the loan amount and sells them at a profit to the buyer. The bank then decides for repayment in installments. Next, the contract that can be used under this product is Musyarakah Mutanakisah, Ijarah Mutahiyah, Tamlik, and Istisna. Under Musyarakah Mutanakisah in a property finance arrangement, a diminishing partnership represents a joint effort between the bank and the consumer in which they jointly purchase the property. It employs the rental index or the property price index instead of interest-based financing. Musyarakah Mutanakisah is made up of 3 different contracts, which is Musyarakah, Ijarah, and Buy. Lastly, Sharia-compliant alternative for letter of credit is at the request and on the direction of the buyer, which is the applicant.
There are a few components in statement of financial position in Standard Chartered Sadi Berhad that distinguishes this bank with Islamic bank and conventional bank. Firstly, in the asset component, Standard Chartered Sadi Berhad have stated that the items such as cash and short-term funds, deferred tax asset, property, tax recoverable, and derivative financial asset, the fair value of debt securities measured at FVOCI is the carrying amount. As a result, an impairment loss is recorded as a debit or to profit or loss for retained earning and to credit to other comprehensive income, regardless of the carrying value of the asset. Next, the component in terms of liability is written by the bank that is contain items such as subordinated sukuk, derivative financial liabilities, deposit from customer, which is measured by type of deposit. Due to scheduling differences between the deposit displacement renewable and the execution of commodity murabaha, balances under the commodity murabaha arrangement may be contained accidental core element. Lastly, there are only 2 items in the component of equity, which are share capital and reserve. These are a few differences of items in Standard Chartered Sadi Berhad components that make them differs with other bank component in statement of financial position.
Statements of financial position for Islamic Bank in Malaysia, Conventional Bank in Malaysia, and Islamic Bank first differ in terms of assets, since Islamic Bank has cash and short-term funds, deposit and placement banks and other financial institutions, financial assets, at fair value through profit or loss, derivative financial assets at fair value through other comprehensive income, other financial asset at amortized cost, statutory deposit with Bank Negara Malaysia (BNM), current tax asset, deferred tax asset, right of use asset, investment in subsidiaries and property and equipment. Next, for liabilities, they have deposit from customers, investment accounts of customers, derivative financial liabilities, bills and acceptance payable, recourse obligations and financing sold to cagamas, subordinated, sukuk murabahah, other liabilities, lease liabilities, zakat and taxation, and also deferred tax liabilities. Lastly, the differences in terms of equity is Islamic Bank has share capital and reserve on their statement of financial position, SOPI. To summarize, we can see that there are several differences of Islamic Bank's statement of financial position, which with conventional bank and Islamic Bank.
My Bank Malayan Banking Berhad Statement of Financial Position, SOFI, figures each component in assets, liabilities, and equity. Assets of my bank as of December 31, 2020, they had cash and short-term funds, deposits and placement with financial institutions, financial assets purchased under resale agreements, financial assets designated upon initial recognition at fair value through profit or loss, financial investment at fair value through profit or loss, financial investment at fair value through other comprehensive income, financial investment at amortized cost, loans, advance and financing to financial institutions, loans, advances and financing to customers, derivatives assets, reinsurance or retail assets, and other insurance receivables and other assets. For liabilities, they had customers' funding, which is come from deposit from customers, and investment accounts of customers, deposits and placements from financial institutions, obligations on financial assets sold under purchase agreements, derivative liabilities, financial abilities at fair value through profit and loss, bills and acceptance payable, insurance or takaful contract liabilities and other insurance payable. Additionally, recourse obligations on loans and financing sold to cagamas, provisions for taxation and zakat, deferred tax liabilities, borrowings and other liabilities. In the case of equity, my bank only had share capital return profits and reserves as the equity attributable to equity holders of the bank. From this point of the observation each of the financial statements, there are several variances in the components of each bank assets, liabilities and equity that may provide a picture of the bank's financial health, providing insight into its performance, operations and cash flow. My bank has an excellent track record and is performing well as Malaysia's largest bank and the largest listed company on the Bursa Malaysia by market capitalization in 1962.
The layout in Statement of Comprehensive Income of Standard Chartered Sari Berhad is started with income derived from investment or depositors fund, followed by income derived from investment of investment income funds, which state the finance income and hibah such as financing and advisors. There are also income derived from investment of shareholder funds that measure the finance income and hibah and also the other operating income. In addition, there is other comprehensive or income for the financial period next of income tax and the item that may be reclassified subsequently to profit or loss. For the fair value reserve, it uses the net change in fair value, which is the investment securities measure at fair value through other comprehensive income. Lastly, it have other comprehensive loss or income for the financial period net of income tax. From all the item mentioned, the Standard Chartered Sari Berhad will get the total comprehensive loss or income for the financial period that they want. All the item is SOCI of Standard Chartered Sari Berhad can be differ from other Islamic bank and conventional bank because it complying with the FAST standard.
Components that have in Statement of Comprehensive Income SOCI in Islamic Bank in Malaysia is profit for the year. Other comprehensive income, nets of tax which have items that are or may be reclassified subsequently to profit or loss. The items are currency translation differences in respect of foreigner operations, net change in fair value, changes in expected credit loss, net amount transferred to profit or loss, income tax effect relating to components of other comprehensive income. Meanwhile, for items that will not be reclassified to profit or loss is net change in fair value. To sum up, comprehensive incomes covers all changes in equity over time, excluding those coming from owner investments and payouts, because that method ignores the effects of shifting ownership interest.
Statements of Comprehensive Income SOCI for the financial year ended on 31 December of my bank is including profit for the financial year, total comprehensive income for financial year, other comprehensive income that can be divided into two sections, which is item that will not be reclassified subsequently to profit or loss, and item that may be reclassified subsequently to profit or loss. First, the item that will not be reclassified subsequently to profit or loss, such as defined benefit plan actuarial gain, income tax effect, and net gain or loss from change in fair value on equity instruments at fair value through other comprehensive income. Meanwhile, cost of hedging or fair value hedge, share of change in associates reserve, net loss on cash flow hedge, net gain or loss on debt instruments at fair value through other comprehensive income, which is come from net gain from change in fair value, changes in expected credit losses, and income tax effect are the items that may be reclassified subsequently to profit or loss. For all that, other comprehensive income and also the total comprehensive income for the financial year is attributable to equity holders of the bank and non-controlling interests. To summarize, comprehensive income is the sum of all operating and financial events that influence a business non-owner's interests. It is vast and diverse since it is a conventional bank that based fully on man-made principles.
In a nutshell, this report demonstrates the disparities in financial reporting implementation between the chosen banks in terms of how they organize and operated. We chose 3 banks for this project, all of which are banks. Islam stand for Islamic banks, Maybank for Conventional Bank, and Standard Chartered Sadi Berhad for Islamic bank that follow the FATF standard. In terms of saving, current account, fixed deposit, property finance, and letter of credit, we can discover Sharia-compliant alternatives to conventional financial instruments from this research. Aside from that, we also describe the basis for financial bank preparedness for the 3 banks that we have already chosen. We can also be able to discuss about the differences between components in the statement of financial position (SOFI) in terms of assets, liabilities, and equity, as well as the differences between components in statement of comprehensive income (SOCI). In terms of layout, finally, we can see that the 3 banks have a lot of space for future growth. Even if all transactions are done according to Sharia norms, they are able to compete with other banks in terms of products and services in this environment. Despite the volatility of economic conditions, particularly the recent economic turbulence, these banks have been able to maintain and develop